So if you feel like you've been missing out on Tesla's almost 700% increase in 2020, there is another chance for you from a company that you probably haven't heard of that looks set for another meteoric rise. Before we get there, this is a brand new channel covering personal finance. I'd appreciate it if you hit the subscribe button, turn notifications on. It helps the YouTube algorithm actually recognize that we exist here. So if you don't know me, I'm John Rettinger. I've been making videos in the tech space mostly for the better part of 10 years with 1.5 million subscribers, and I've earned my MBA during that time, and I've made a lot of mistakes when it comes to personal finance. I wanna help you avoid those same mistakes and try to make your money work for you, kind of break down the misconceptions that you need thousands, hundreds of thousands of dollars to start investing and sort of turn the financial fortunes around. You do it with as little as $10, $20, $100. Now, a few disclaimers here. I am not a licensed professional. I'm just a guy who's trying to learn and try to teach what I have learned. And also I'm noticing, new to financial channels, you'll see people in the comments claiming to be experts and wanting to have you send them their money. Don't do that. Make your own financial decisions and never invest what you can't afford to lose. And know there's inherent risk in anything that you do. Check out this car. It's pretty good looking, right? It's the ET7 by NIO. You might not have heard of them. They're an EV base in China, and it is not vaporware like a lot of EV makers out there. They're producing like actual cars that can be purchased and driven, just not here in the US. But what we can do in the US though is trade it if you want on the New York Stock Exchange. So I think the big question is like, why are we even talking about an automaker on the other side of the world? Well, first, their stock rose over 1,000% in 2020, which, let that sink in, is a stupid number that actually catapulted the company into sort of the mainstream. But it hasn't been an easy road at all for NIO. Tesla's rise has been like meteoric, right? You've seen it all over the headlines. You've seen Elon Musk on the news. You've probably even retweeted a few of his memes. But that sort of rise of Tesla has led to a lot of investors and speculative investors, looking for the next Tesla. I don't think there's going to be a Tesla killer, so to speak, but the next company that can achieve what Tesla has. And I think one obvious place to look for that is in the largest automotive market in the world, which is China. So it hasn't always been like great for NIO. Prior to 2020, they were kind of flirting with bankruptcy, and then obviously they exploded, mostly due to push by the Chinese government, which is making a real concerted effort to accelerate growth of their homegrown EV industry. That really helped contribute to things you need for a company, right? Strong sales, growth, and with those, investors piled on in droves. And full disclosure, I am one of them. My first investment in NIO being back in August of 2020. So Shanghai-based NIO is obviously looking to capitalize on this crazy Chinese EV market, global interest in EVs, and people just kind of clamoring to sort of get their money inside of the next Tesla before they explode with market cap. So EV sales in China, just as a heads up if you're considering it, surpassed 1 million in 2020, and the government there aims to expand that to 5 million by 2025. So huge potential. The number could reach even 10 million by 2030 and could approach 20 million by 2040, according to research organization Bloomberg NEF, or Bloomberg NEF, I don't know. Competition is also growing though. Obviously with big market share comes competitors. Even from Tesla themselves, they've delivered their first Model Y, their SUV, from their Shanghai factory just earlier this year. And other Chinese EV companies are looking like, I want a piece of that delicious, delicious pie. And they're growing at triple sales rates. So NIO is sort of far from being the leader in the country, but there's clearly room for exponential vehicle sales growth in the coming years. And NIO's ET7 introduction shows the company wants to have a larger role. And they're doing some really cool stuff too. They've got some new innovations and new technology, things like battery swap programs, allowing customers to kind of recharge their battery faster by exchanging it. And they're also saying that this sort of battery swap technology can take 3 minutes from a battery swap station. We've seen a lot of companies talk about battery swaps before. It seems a little bit vaporware-ish, but this is a company who is in a market that is clamoring for EVs, already has infrastructure to start delivering cars, and already has cars on the road, which is why personally I became excited about them. It wasn't sort of a, look at our render of a car, give us a deposit, and maybe you'll see it on the road in 4 years. So that's all fine and good, right, for the company, but like, what about the stock? So as with other names like Tesla, the question investors and I struggled with is like, what do you do with the valuation, right? So NIO's 2020 revenue through the third quarter was almost 1.5 billion, and full year 2020 was around 2.5 billion. But the company is yet to make a profit, which again, very reminiscent of Tesla a few years ago. So looking at a price to sales ratio, I think is a better way to evaluate them and to figure out what they're worth. So let's do it. With a current market cap approaching 100 billion, NIO trades at almost 40 times 2020 sales, which is estimated to be 20 times 2021 sales. So using that metric and a bit of voodoo math, it's valued higher than Tesla. So considering the competition and uncertainty kind of from this point going forward, there's clearly more downside risk than upside potential in NIO stock. And I see it as an investor in it. But other investors are betting that the massive potential for EV growth is sort of their ace in the hole. That if everything goes right for the company, shares could clearly outperform. That definite downside here. And you're gonna hear a lot of people talking about like NIO, buy NIO, buy NIO. And if you're considering it, and I'm not advocating you should or shouldn't, you should at least know that going in, that there is significant downside and risk, a la Tesla a few years ago. And if you wanna get into the EV market, NIO is not the only like newish player that you can sort of buy shares of right now. They've been blowing up SPAC deals like crazy. Companies like Canoe, Fisker, Lucid Motors, the day I'm filming this, announced a SPAC with Churchill Capital. Warren Buffett backed BYD, and they've actually sold cars almost 131,000 in 2020. So there are real companies out there. And I am very, very aggressive, and I believe in the EV market. I think we see a lot of manufacturers all over the world pushing EVs. And when we get to sort of that critical mass, price per kilowatt coming down, and range being standard over 250, 300 miles, I think we're going to see more people adopting them. But there's always sort of a gold rush when it comes to the market, especially now. Everybody's looking to get rich quick and make a buck. I want to remind everybody there is no get rich quick in the market. When you invest in stocks, you are playing in a rigged system. And the best that you can do is limit your liability. Know the information going in, and then make your decisions. And I've made that decision, and I'm at peace with the risk of investing in companies like NIO. But you gotta check it yourself and see if you can live with the risk, and at least consider you're probably looking at a long-term hold as the Chinese market looks to adopt more EVs over the coming years.